Welcome back. CLSA's chief economist Leif Eskesen believes that India's FY26 GDP growth will be at 6.9% and also expects FII flows to return to India after some more healthy correction. Our colleague Latha Venkatesh did catch up with him. Listen in to that conversation.
Yeah, so if you look at the current fiscal year we're looking at growth coming in just a hair below 7%, so 6.9% to be exact, right? So relative to the first quarter of the fiscal year, it does, you can say, imply some slowdown in growth during the remaining 3 quarters of the fiscal year. That sort of slowdown, I would say, is sort of driven essentially by 2 factors. One is because the government has to sort of rein in to some extent, you can say, spending to meet the deficit target. We think there'll be some sort of slowdown on that side, maybe sort of government-led infrastructure type investments. And then also the sort of, should we say, lagged effect of the higher tariffs that got imposed on India from the US, and also a slowdown we're seeing in global trade in should we say, in the coming quarters as well, would be the 2 factors that will drive that. I guess if we start to see the effect of some of the GST reform, that could provide a bit of a lift to the consumption side of things, right? So that's why the slowdown we are looking at in the remaining of the fiscal year is not that significant. So as I said, full year fiscal at 6.9%.
Would you put an upward bias to that 6.9 because of the GST cuts and the probability of a trade deal with the US?
Yeah, I mean, certainly, I think the chances of a trade deal have gone up, right? I mean, Trump has certainly indicated as much, and the 2 sides are still negotiating on that front, right? So whether it happens on this in this calendar year or in the beginning of the next calendar year, so the last quarter of the fiscal, we'll have to see, right? But I suspect that we could move towards a deal, right, where maybe the tariff rate that's imposed on India lands at something similar to what we're seeing for other Asian economies, to say around 20% thereabouts, right? And then, of course, there'll be some give and take also in terms of purchases and opening up for certain sectors, etc. That would be part of that broader deal, sort of in similar fashion, but not quite the same as we've seen from some of the other Asian economies, right, where they've entered deals with the US.
Okay. Well, is there any, I mean, this is not really an economist's question, it's more your equity strategist question. But do you see the global view on India changing? We've seen the largest amount of foreign investment outflows from India. Now, as you know, the GST cuts and the income tax cuts in India work in and earnings improve, and probably the trade deal comes in, do you see the movement of funds back into India? I mean, a lot of the rupee depends on that. That's why I'm asking.
Yeah, I mean, so I think, given our view on, should we say, US equities being quite frothy, right? And should we say, a little bubbly, if you will, right? I mean, we do also see a relatively high probability of a correction in US equities, and that also would imply, should we say, more of a sort of less risk appetite, more broadly speaking, globally, right? So I think it will be hard for Indian equities to sort of buck the trend in that type of environment. But if you look, should we say, beyond that potential correction, and if there's also maybe some further correction in India in the context of that as well, right, and valuations are maybe somewhat less, should we say, challenging to the extent they are now, then maybe there could be a bit more scope if we start to see the GST reform adding to the growth impulse in India, right? And if growth holds up relatively well, that there could maybe be some resumption on the other side of this of equity investors coming in, right? But I think valuations still are quite high. I think positioning domestically is still quite long in the tooth as well, right? So I think that is still something that does pose, I guess, challenges from the point of view of foreign investors in the near term, right? So maybe a healthy correction could be a good sort of starting point, right, for seeing flows coming back in.
Okay. Well, just a final word. How many rate cuts do you see from the Reserve Bank? Is it just one in December or, more?
So we currently have two, 25 basis points in each of the two following meetings, right? So we're not buying it. We're not looking for 50 basis points in December, which I think came up after the latest inflation number, right? But I think what you need to look at is if you look at core inflation, right, in India, it's still added around the target, right? So I don't think there's necessarily a case for cutting by 50. So 25 basis points in December, and then subsequently another 25 basis points.
Well, that was a very interesting conversation with CLSA and with the Nifty nudging the 26,000 mark once again. It's all the time we have on this edition of Midcap Radar. Finding Alpha when we return.